Our next panel discussion is on digital transformation, redefining the banking landscape. Digital transformation isn't just a trend, it's a fundamental shift that's redefining how banks operate, engage with customers, and drive innovation. So let us explore how this powerful force is paving the way and setting the stage for a new era in banking where technology and customer centricity go hand in hand. To give a brief introduction about this topic, let me call upon our guest speaker, Mr. Rajeev Ranjan Prasad, Chief General Manager, Digital Banking SBI, to kindly come onto the dais. But before that, a few words about our guest speaker. Mr. Rajeev Ranjan Prasad is a top management executive with a career spanning over 3 decades. Mr. Prasad joined the bank in 1992 and has over the years been part of retail banking, IT, trade finance, international banking, HR, etc., at various levels, working both in India and abroad. Currently, Mr. Rajeev Ranjan Prasad is head of Digital Transformation Department of SBI, spearheading the digital initiatives of the bank, working on various projects which are bringing immense value to the bank. Mr. Prasad is also involved with various Government of India-led projects aiming at digitization of products, processes associated with their initiatives. Kindly, Mr. Prasad, I request you to come onto the dais and deliver the guest speech.
Is forward. Thank you. Good afternoon, ladies and gentlemen. First of all, at the outset, I thank CEO, Indian Institute of Banking and Finance, IIBF, Sir Vishwaketan Das, for given me this opportunity to come here and talk to you on the kind of digital transformation, or I would say the digital disruption that is happening around the world, particularly I would say in India. And also taking from what the ED of RBI, Madam Kar, actually mentioned, a lot of things, a lot of topics, a lot of pointers she actually has already covered. But I'll just take this opportunity to take you through some slides. I know the time constraint of I think 20 minutes is there, so I will try to finish within that time itself, and if time permits, I would be open for questions also if any delegate or representative from any institution wants to have questions on that, some queries on that. Thank you. So let me first take you through this entire digital transformation, how we have moved, how the banking system overall across the world, you must be familiar about it also, how the traditional banking used to happen, how that has transformed from the branch banking, where the traditional banking model was in the center, the branch was in the center, and physical movement and everything, and how that has moved from traditional banking to the digital banking, where now customer is in the center. And it is a choice of the customer how he wants to interact, with whom he wants to interact, when he wants to interact, how he wants to interact, everything. And that interaction has a very, I would say, immense impact on the way this disruption is happening across us, around us, is that customer of today is not exposed to only banking app. He is also exposed to various other, I would say, apps which is there on his mobile, which is there on his laptop. He is getting exposed to kind of social media apps also while he is on the move. So when he actually tries to use any banking app, he also tries to compare as to what was his experience when he was on the social media app, how was his experience when he was using some other app, like I don't want to name any app, but how was his experience? So all the time he or she is actually comparing his or her experience that he or she is having across other apps, and he is trying to derive the same kind of experience out of the banking app as well. So apart from giving the flexibility and the kind of, I would say, the experience, it's also, I mean, this has become incumbent today that the banks also provide almost, if not similar, exactly similar, at least the close to similar experience to the customer from their banking app as well. Another thing that I would like to point out here is the kind of capability that this digital transformation has brought about in handling the customer as well. Using big data, the analytics and all, that omni-channel experience, the hyper-personalization. Let me see, yeah. This one, like omni-channel experience, even the hyper-personalization using the big data and the analytics, that is now a given thing. It's not that something you or any bank tries to provide as an USP. This is the minimum expectation of any customer of today. This is how, if you see the landscape, how the digital transformation in India has evolved over last few years. Today, the Indian payment system, actually Indian payment transactions account for 46%, almost 46% of the total digital payment across the, around the world, which is a huge number, so to say. And this is actually growing by 40% CAGR. And if you look at other parameters, how the mobile adoption, the smartphone adoption has moved up to 906 millions. The UPI transaction, we have been talking about UPI, and this has become actually showpiece across the world. And now we are also under Project Nexus. Actually, we are trying to work with various geographies. Representative of few countries are here also. Try to use this UPI for cross-border transactions. So RBI is working, and we are also part of that project to work alongside the governments to make this UPI functional across various geographies of the ASEAN countries as well. Similarly, if you see that digital payments actually has now 164 billion transactions happened last year. So huge numbers that you see, and all this digital transaction is resulting into what? It is resulting into the customer leaving huge amount of by virtue of his or her interactions across the digital channels. Lot of immense amount of data footprint is being left, which is being used significantly now by the banks, by fintechs, by many other banks also in collaboration with fintech, with the analytics. They are using this data to offer personalized or maybe unsecured loan, secured loan, everything to the customers. 40% of 40 to 50% of today unsecured loan is happening through the digital means. And if I take into account the fintech, how the fintechs have actually given the output in this unsecured loans, almost 59% of the unsecured loan have been financed by the fintechs. And out of this again, the 59% of the fintech unsecured loan has actually been given to customers who are below 35 years of age. So young customers are now availing, they're open to availing credit, and they are more and more, they are using the digital channels to actually access those, that particular. Out of this 59% also of this 35 years of age, again, if you see, only 14% of this fintech led unsecured financing, digital financing has actually been availed by the females. So huge opportunity exists there as well. And the ticket size of this unsecured loan financed by the fintechs is less than 10,000 rupees. So just imagine, had this particular capability not been built through various mechanisms, through various levers, how we actually, any country would have, or particularly India would have handled and ensured that the credit penetration also happens in a big way. So this is, you can see how India fares in terms of online usage of the data. Everybody is aware, everybody knows that the data now is only few months back, or now recently we are seeing some kind of uptick in the data cost. But before that, the data were dirt cheap in India, and people are so used to now, even after that some slight uptick has been done, made by the telecom companies in their cost structure, even then the usage is not going down. A huge amount of time is being spent by the customers on these online channels. So what are the key strategies? Key strategies around which the digitalization has been worked in the bank, how they have actually worked. So there are three key pillars. How to actually the basic, all the customer journeys have to be digitally designed. Now, banks will have to pick and choose which journey to make a hybrid, which journey to do in assisted, which journey to handle on an end-to-end and a self-assist mode. That is a call that every bank will have to take basis its own segment of customers and the kind of portfolio that particular bank handles. So like SBI is a huge, we work on a huge scale as well. So what we have done that we have this, and also we cater to various kind of customers, right from the very literate, very digital savvy to the customers who are also not that digital savvy and also residing in rural. The accessibility again is a challenge. So we have designed the journeys which are of self-assist nature, we are of assisted nature, which are of hybrid nature, where customer does a part of the journey in a self-assist mode, and then subsequent part is done in assisted mode at the branch or at the business correspondents. Another part is with regard to the automation of operations. Now this is a big thing because ultimately, even if we design the journeys, how do we deliver it? And that requires the huge amount of automation efforts to be carried out with the financial institution, because this kind of digital delivery cannot be ensured, or cannot be at least efficiently ensured by using that legacy infrastructure that we are actually using. So the banks will have to transform its system also, at least to the extent where it requires that digital delivery capability has to be built, and that has been done in a big way using various models, particularly by bringing in the cloud infra, and also by bringing in the MarTech and a huge amount of analytics capabilities. These are the three, I would say, three key levers which would actually automate the operations also, and which are required to be done if efficient digital deliveries to be ensured. Another thing is the leveraging data. Now, in today's world, it's not the big data which is important. In today's world, it's a big analytics which is important. What you need today is the huge analytical capabilities, and for which huge or good amount of computing capability also have to be built. Now this is very capital intensive, everybody is aware about it. So every bank in India also is trying to work or use these capabilities or work around these capabilities in their own manner. Some people are going for LLMs, some people are going for SLMs, depending upon their own requirements. So fourth pillar which is required is pertaining to the org culture, I would say, because digital also requires, I would say that innovation has to be a continuous process when it comes to digital transformation. And when it comes to innovation, there are chances that that particular innovation may fail. So that change in the organizational culture is required to be brought about, where the failure is accepted. You fail fast in case something are innovate quickly, fail fast, and in case you fail, recover fast. That is the kind of strategy that banks have adopted, and that requires even more adoption, I would rather say. You are all familiar about the digital public infrastructure, and if we kind of disruption that we see today, this is one thing which has actually made this possible in a large manner, I would say. Every area, whether it's finance, whether it's health, whether it's delivery of social services, whether it's social security measures, everything has been actually made possible by this creation of this digital public infrastructure. And Madam Carr also mentioned about, earlier speakers have also mentioned about this Jam Trinity. So that was the starting point. But basis that Jam Trinity, and also by virtue of the fact that banks actually pushed for, under the, I would say, the guidance of the government and the regulators, bank really pushed for seeding of the mobile numbers, seeding of the Aadhaar number, which is a unique identity, into each and every account, saving or each and every account of the customer. That has made this, I would say, creation of a digital public infrastructure possible, and also the results that we are seeing out of it by means of creation of India Stack, on which the Open framework has been built, that I will explain in subsequent slides. That has all been made possible because of the creation of this digital public infra. But the main reason that the disruption, and I would say the successful digital transformation that we are seeing in the country, is actually coming on account of the very, I would say, collaborative effort and the perfect symphony in which the regulator and the government of India has been working. You look at each and every item on the slide now, your central banking digital currency, fantastic pilot being run by the regulators. Though in a limited manner, but we have been running this very successfully and testing it out. Another is the frictionless credit platform framework, which Madam mentioned about the unified lending interface. This has been built under the aegis of Reserve Bank Innovation Hub, and good amount of capabilities in terms of APIfication has been brought about by creating those API, by creating a platform basis the APIs, which can be in a plug and play model, can be used by the banks, and that reduces good amount of pain point in the sense that banks do not necessarily then have to go through the regular procurement process for each and every fintech, where you go through the technical evaluation, where you go through the commercial evaluation and all those things. The fantastic capability again, which is actually helping the banks to scale up and scale up very fast. Another part that third, if you see regulatory sandboxes, already 4 cohorts have been already been conducted by the regulator, and this is helping the fintechs and the startups to test their solution in the sandbox, in the regulatory sandbox environment, and to be ready when it comes to integration or kind of integrating with any financial institution. Right now in the e-commerce in India, the digital penetration, the e-commerce activities, the penetration percentage just about 7%. And that leaves with a huge amount of opportunity, in the sense that it's largely controlled by the big, I would say, e-commerce players, like e-commerce players who are controlling major share of the market. And they control this lot of through algorithm. They control what product to sell, which product to show, and also they are in a manner they are able to control the, I would say, the sellers also. So government thought of why not bring about some kind of democratization there itself in the e-commerce activity also, given the fact that this has immense opportunity. As I said, only 7% penetration right now is there. So government of India came up with this online network for digital commerce, which is just nothing but a network of API protocols, using which any seller of any size can easily onboard on the particular network, and their product, and that product can be made discoverable across the network, and for any seller app, buyer app, and anybody can access those products. And the idea is to actually make it the marketplace platform make available to every, at the local level, I would say, rather at the hyper local level, not only the seller but also the logistics company. Similarly, IFTAS. IFTAS is a regulatory subsidiary of Reserve Bank of India, which apart from creating other tech and allied services capabilities, has also created services which is on a shared basis. Digital lending guideline, regulators have actually, they saw that, okay, there is a potential of misuse also if the fintechs are allowed to, or the companies are allowed to work in their own way. So they came up with a very robust, the initial phase they allowed some amount of innovation to take place, they allowed some amount of exuberance to happen, But slowly but surely, they came up with this digital lending guideline, which has brought about a lot of guardrails into the system when it comes to lending. And this is actually, the idea is to not only promote the innovation, but to ensure that the innovation is assimilated in the banking system in a non-disruptive manner and the consumer's interest is protected at each step of the journey. The TREDS platform, this is an integrated platform for for invoice discounting. The Government of India reduced this from 500 million turnover requirement, it has reduced it to 250 million requirement. Similarly, for Center of Excellence, through a budgetary support, 3 Center of Excellence for AI. Government of India has announced in the last budget and allocated a budget of $30.5 million US for that. Similarly, your National AI Mission and National Semiconductor Mission. One thing which I missed out here, but I would like to mention is the account aggregator framework, which has been actually enabled by the regulator, which has made possible the discovery of account by any financial information user. So what has happened and what exactly this account aggregator framework has done, that this has passed on this power, the power of data, the ownership of data, and that power which had actually was lying with the banks, where the particular account was being maintained by the customer, that power has gone back into the hands of the customer. So now he or she can move to any financial institution and financial information user, give his her consent there and make use of the facility, whatever they have now offer there, whatever competitive or whatever it is. Similarly, for the fintechs, RBI has already announced the self-regulated organization. They have created a SRO there. So the disruption, as I was saying, has been made possible because of the very nice collaborative effort between the government and also between the regulators. So what is happening that these disruptions which actually have come on account of these capabilities and the innovations and the technology being brought in, there has been total paradigm shift from the account ownership perspective. That paradigm of maintaining an account, banks were fine, okay, we are maintaining the customer account, so the customer is with me. That account ownership paradigm has totally changed now. As I was saying, that customer is now free. So banks will have to keep on innovating, banks will have to keep on creating a new business model to retain the customer, to retain the business also. So account aggregator I have covered. OCEN, I had mentioned about the OCEN, which is a Open Credit Enablement Network. This is again a open protocol of open APIs, which have been created on the top as a top layer of the India stack, which can be used by anybody, any financial institution, any fintech to offer its services, lending services, and which is being aggressively used. The numbers which I gave you, that 59% of the unsecured loan has been done, for the up to 35 years of age has been done by the fintechs. So that is being made possible by this OCEN network which has been created over the top of the India stack. Similarly, the credit bureau, the alternate data, now I'm sure you must be aware that now government does the fast tag. Any toll tax has to be toll, or the vehicle toll on the road, on the national highway, has to be paid by toll, by the FASTag, which is National Electronic Toll Collection, NETC. And that itself is seeing such a surge that data is also being used as alternate data, apart from other data that is being collated from GEM portal, from ONDC, from social media, and all data being collected from all these sources. GST is actually now giving a huge amount of push to the digital lending. In fact, one item is there which is land record digitization. Using this land record digitization, actually states have created capabilities and banks have also helped there is that we have created, crop loan journeys where within 5 minutes, the customer not only avails the loan up to 1.6 lakhs, not only he avails the loan, but entire life cycle of the loan is completed in within 5 minutes, including the digital document execution. That kind of capability we have created. So, all these elements that you see actually are creating a huge amount of, these are actually being used as a force multiplier rather, I would say, in the digital lending. UPI, you are aware about it. 80% of the digital transaction in India is happening through UPI. Now, using that data and also by bringing in various other capabilities like credit line on UPI, linkage of credit card on UPI. So all these things is actually now likely, and this has a huge potential in actually giving a huge fillip to the lending again, because merchants straight away see a benefit, huge amount of benefit they see here. Like credit cards, if you use a credit card, you swipe a credit card, because merchant has to pay some amount of, he has to wait for the settlement to happen, maybe T+1 or T+2, and also to pay some amount of MDR. Whereas through UPI, there's an instant settlement. He doesn't have to wait. So taking those benefits actually into account, into consideration, now we are seeing actually good amount of shift happening from the card usage, credit card usage, to the UPI usage with the linkages and all. Though it's a fact that, okay, the ticket size of credit card or the credit card usage is actually going up because the UPI credit, the ticket size is low. It has come down from 1,600 to approximately 1,300 now. So it has become ubiquitous, and this is what the UPI is also trying to do, that they are trying to cover each and every aspect of the customer life cycle. Earlier it was only for payment, but now they are actually getting into the lending business as well. How much time? So similarly, I've explained to you, and also Madam Kar had spoken about it, that in SME business, whatever we spoke was regarding the personal and the retail segment. But in the SME segment also, the GST component, that all these things are actually the ESG financing and the GST capability, the integration with GST, integration with GEM, integration with the NETC. All these things are actually bringing about huge revolution there as well. And actually, the basis the data, basis the APIs. Now the opportunities are immense. Now everybody, all financial institutions are trying to encash that opportunity in their own manner. Now some people are creating kind of a neo bank which is totally digital, no physical presence. Some banks are doing it in a different manner, where they are building into their own processes. They are within on-prem solution they are building in terms of creating business rule engine based solutions, which actually uses more than 500 variables to arrive at the business decision for lending, for the SME lending, and also to the, as I said, about POS-led acquisition. So QR code, actually the way QR code penetration has grown in the country, it has moved beyond tier 1 cities now. It has actually moved into tier 2 and tier 3 cities, and the YOY growth rate is more than 30% in tier 2 and more than 17% in tier 3 cities as well. The benefit and the reason, as I said, is the merchants are preferring the QR code because of the instant settlement and no fee, no charges. For the digital BRE which I mentioned, like bank also offers pre-approved business loans. SBI also offers, which is just about 45 minutes of journey, and it's done. So significant business opportunity exists, In SME lending, particularly in supply chain finance kind of lending, the outstanding is just about 5% of the total banking advance in SME business. Very small outstanding. A huge amount of, I would say, opportunity there. In deposits, it's just not a kind of, now deposit cannot be looked at by the bank only as, I would say, just about a fund. Now this actually requires that a bank build solutions around deposits where they show value, and a kind of they have to set up command centers to mobilize deposits. They have to build KPIs around that. They have to create a very clear visibility for the customer to actually see value in keeping funds with a particular bank. And the cross border is another big area. I mean, last year India received 125 billion, and this is the largest recipient of the inward remittance. Cross border remains again one area where the various solutions are being talked about. CBDC is also being now looked at from that cross border enablement perspective. Also, if you look at the transaction size, the value, the ticket size has significantly gone down, which has actually resulted into significant uptick in the volumes. We have been talking about generative AI. Various banks have tried to use it in their own manner. And use cases, you know that bank is a highly regulated entity. So how to use generative AI? It's a conscious decision taken by each of these banks at their own level, and they're looking at it from the cost benefit perspective. They're looking at it from the risk perspective, and they're looking at where to deploy it and what time and what should be the timeline to use to deploy it, that particular Gen AI. And actually Gen AI has the potential to save almost 2.8 to 4.7%. And actually this is having anticipated. There's a McKinsey study which says that 4.7% almost impact on EBITDA in terms of profitability is expected. But in banks, actually the Gen AI capability of the use case is restricted to the top software engineering, customer service, marketing, sales, and risk and legal. And the 90% of the actually uses is these top 4 items, I would say, in the generative AI. And yeah, it's over now. Yeah. So the issue with Gen AI is that, I mean, we will have to take a call, because as I said, banking is a highly regulated. So where to use, how to use, what are the data constraints, what are the with particular process that we want to use it for, what is the regulatory guidelines, the guardrails around that particular process, everything has to be looked into before the generative AI is actually deployed. So everybody is testing it out in their own manner, mostly for the, I would say, sales promotions, marketing and sales promotions, for contact center agent activities, and also for the employee skill development and things like that. So banks have actually, as you would have seen, has actually transformed these basic 4 challenges which are there into opportunities, and by use of various kind of solutions built around Gen AI, built around cloud computing capabilities, they have actually built opportunity around this. So the question that is actually I will conclude with is what exactly customer is actually looking for, and going forward maybe a decade from now, what will be the future of the banks? Whether the customer will be looking for a bank, or customer would be looking for only for a banking service. So that is a question that I think every bank will have to deliberate upon, and then align its solutions and the products offerings accordingly. Thank you, and thank you again to IABF for giving me this opportunity. Thank you.
fact, a wonderful presentation, and your last line, whether people need a bank or banking, food for thought for everybody, is either you compete successfully, if not collaborate. Either you disrupt or get disrupted. Wonderful presentation. Thank you.